Good afternoon. It is Monday, May 10th, 2021, the day after Mother's Day. Hi, moms. Hi, my mom. And today is the love of my life, Jolene's birthday. And tonight, I am taking her out to the Milwaukee Public Market in downtown. Going to stop at St. Paul's and have some lobster and some other stuff. Then walk around the corner through the little mini mall area they have there and get a little dessert. Maybe a little bit of wine. We'll figure it out as we go. So anyway, if you're on fundamental trends, again, hit the follow button so that anytime I publish an article, you get an email notification. You can also still get the browser alerts by signing up here. So you can get browser alerts, you get emails. Saves me a lot of time of sending out an email, which I was really bad at doing. So it's all automated now. All you have to do is pick your favorite method of delivery. And if there's an article that you think is awesome, after about 20 seconds or when you get to the end, you can share it on social media, which I really would like for you to do. And even if it's a margin of safety piece, I think you can share it to social media here too. Yeah, right here. Say, hey, share this to Twitter. And the thing is, they'll get a sales pitch from me when they click on it. And I like to give them a sales pitch. So there you go. All right, let's take a look at the goods. Stocks of the week. Rotating corrections thesis is clearly playing out. I was talking to you about this happening how long ago? January? Right around New Year's, right? I said that 2021 could be an awful lot like 2015 and 16. And here it is. Parts of the market are correcting while we chop along the same toppy range that I think we're going to come off of when your bigger stocks get hit, when Tesla gets hit in particular, when Bitcoin gets hit and drags some other things down. But a lot of stocks are correcting already. And that means it's time to look for pivots. So what is going on in the world? Well, let's review a couple of ideas. Ford announced a new F-150 Lightning today that somebody told you was coming about 16 months ago. It's entry into the EV pickup space. I believe that this is a game changer. Remember, the F-150 and 250, 350, the F-Series is the top selling vehicle in America. And here's how they pitch it. Every so often, a new vehicle comes along that disrupts the status quo and changes the game. Grrr. Model T, Mustang, Prius, Model 3. Now comes the F-150 Lightning. It's from the CEO, Farley, who I tweet from time to time. America's favorite vehicle for nearly a half century is going digital and fully electric. F-150 Lightning can power your home during an outage. That's pretty neat. It's even quicker than the original F-150 Lightning performance truck, which was a gasoline vehicle years ago. And it will constantly improve through over-the-air updates, just like those Tesla guys. But yet this stock is 11 or 12 bucks. Tesla is whatever it is, hundreds of dollars. So I've made no secret that I think that the Ford is going to give Tesla a run for its money. I think they're the best positioned. They have the best partnerships. They're investing in technology, and they don't have anywhere near the financial drains and strains that GM has. And I know people want to talk about GM's balance sheet, but I'm just telling you, Ford is in a real good position because of their real estate portfolio, and their technology is just better, which gives them the ability to get into other markets. For example, ventilators. I know GM did that too, but the fourth industrial revolution technology that Ford has is off the charts. And you just need to either A, believe me on that, or go do the reading using those key words. Ford, fourth industrial revolution technology. It is amazing what they can do. They're one of only 50, maybe there's more companies now, but at the time that I really was researching this a year and a half ago, only about 50 companies on the planet could do what Ford can do. Maybe that's 60, 70, 80 now, but that's still not a lot of companies that could do this stuff. So if you don't have a full position in Ford, get a full position in Ford, because A, it's going to buy back shares, and B, even if you're a dividend investor, The dividend will come back. They've already talked about it. I expect the dividend to come back 3-4 years from now. But when it comes back, it won't be, 0.5%. They'll bump it right to like whatever the S&P 500 average is. So I think these guys have a leg up on everybody. Stellantis, GM, Volkswagen, all of them. Teladoc. I don't know where the bottom is. And this is a stock that can sell off with ARK. So as people redeem their ARK shares, as they get frustrated, because that's what investors do, Teladoc can go lower. So I'm holding off, but I'm keeping an eye on it. Zoom, same thing. Another stock that has ARK risk. I think we see a price closer to 200. But if it gets to around 200, I'm probably going to want a hunk of it the moment that the downward momentum subsides. Let's skip this one for a second. Paycom made me turn my head. It's time to start looking at it again. They've starting to get oversold. Exact Sciences I know real well. That's where I made just a ton of money years ago. And their stock is under 100 again. And I'll tell you what, if it gets to the 70s, I think you probably got a nibble on it for a couple of reasons. One, their technology in testing is really good, and they have not shied away from smart M&A deals. I also think that they're a potential buyout candidate. So if it gets into the 70s and you buy something there, I do think that the upside is 200. I said this, 5 years ago when the stock was 20 something and Citron was ripping on it. I said it's going to go to between 100 and 200. Well, it's been a 140. Now it's under 100 again. So it's a triple from the 70s potentially, I think probably. But the M&A potential gives it even more upside than 200. So in the 70s, I'd probably take at least a starter position, and then I'd see what happens. Your solar basket of Sunrun, Enphase, and SolarEdge, there's another one we're going to cover in a little while, should all be watched right now. They're real close. I've talked about them recently. And you want to watch those if you want to add solar stocks to PBW. So PBW, I think, is going to be a pretty major holding for most of us. And it is getting real close. I've put in a hypothetical extension line. So if PBW gets to 65, this is where the extension lines would line up and about where the target price would become. Yeah, that's pretty good. 65 to 240, 250. That's potential quadruple. Why? Because a lot of these companies now suddenly are starting to turn profitable, right? Profitable is a thing. It's allowed. It really is. Profitability is allowed. Now, I know that's not the case with a lot of the favorite stocks from the last year, but profitable is cool. And I think profitable is going to become the new cool, the new old new cool in the next few years. So if we can get ahead of the new old new cool, which is profitability, over the next several years, we could probably do pretty well. So I think that if you can get this one in the 60s, you probably should. 70s, it's just entering into the 70s, or it was actually a close at 76. So I have limit orders at 67. I'm going to monitor those really closely because if I can get this at 67, remember I already took a starter position. If I can get this at 67, I think that's pretty good support. I mean, I guess there's a possibility it goes on to the 50s and 40s. There's huge buying pressure in here. We'll see. We'll see. We have to measure the overboughtness. But look, it's getting overbought on the weekly. The MFI is starting to turn up. That is a positive divergence. So I think you're going to see MACD turn up. I think you're going to see your rolling averages turn up. I think you're going to see your CMF turn up as the institutions get interested again in the underlying stocks. So PBW is real close. Now, if you want to overweight solar, you could always buy TAN, or you could pick out your own basket of stocks. So let's go up here, cover one SPAC. For those who believe that the past portends the future, and remember, past performance is no predictor of future performance. That's just the official thing to say, and usually pretty right. But if you believe that great management is great management and great management does great management things, then you have to pay attention to John Malone and his team at Liberty. And you have to remember that he has a relationship with some real deep pockets at Berkshire Hathaway. So this Liberty Media Acquisition Corp, LMACU, which I bought at like 12, is in the middle 10s right now. and it's really oversold on the weekly, like a lot of other SPACs. I'll just say this. These guys have been among the very best investors in the world, for 20 plus, 30 plus years. They don't do bad deals. They just don't. Everybody thought they were crazy, cray, when they bought Sirius Satellite, whatever that was, 10 years ago, 12 years ago, is a while, 8 years ago, something like that. They're only up, 6, 7, 800%. So they make good deals. So if you want to speculate, and if you're in stocks, you speculate. If you want to speculate on something with big long-term upside, just because you trust the management team to do something smart, put a couple bucks here. It's close enough to the IPO price that your downside is maybe, it is almost nothing, 60 cents. If you have to redeem the shares and then just keep the warrants. Because that's how that works. Remember, if you buy SPAC units before the deal, and they make a deal and you're not so sure about the deal, you just redeem your shares, get your 10 bucks or $9.50 a share back, whatever is in the basket at that time, right? Because it's backed by the short-term cash holdings, and you're allowed to keep the warrants because they don't redeem the warrants. So you can redeem the shares that are parts of your unit, you get cash, you basically get the warrants for almost nothing. Very cheap anyway. So I took the format from the ETF trends because I thought it was effective and everybody says they like it. So we're looking for trends to jump onto, looking for trends that I think we can ride for at least 3 to 6 months. Why not shorter? Because shorter, you're getting rid of your margin of safety. I want something that looks like it's going to go for 3 to 6 months. And if it doesn't, because we're monitoring it as we go, we can always jump out. But if we look at something and say, oh, this might go for a few more weeks, that's a hit and run. I mean, if it goes against us, it could go fast. We have recency bias, you get blown up. So I want things that look like they have 3 to 6 months to run. They don't have a weekly overbought of 69, right about overbought. Something with an RSI in the 50s maybe, just started its trend up, right? It's just post pivot. And ideally, we can hold these for over 12 months, right? Not overbought yet. I just said that. Have positive momentum, right? It's a trend that's already started, and roughly fair valued or even undervalued. My gosh, undervalued. That's allowed too. So what am I looking at? I tell you what, there weren't a lot of great ideas out there. There just wasn't. So I took a look at Cisco. Flip over here because I know the chart is in there. Cisco, Fortress balance sheet. On the right side of 5G, pays a dividend 2.7% if you get in now. That's a little bit out of our buy range, right? Because I've talked about Cisco a lot. And look at this trend. I mean, that's beautiful, right? And it's not too far from potential breakout. So it gets through this level, and I think it's probably going to bounce down. Give you an opportunity to buy it around 50, probably. Then it break up through here. So I think it'll probably do a little jitterbug. You can buy it. You can ride it up to 60-ish. I think when it gets up to 60-ish, it's going to break out. Everything to me looks like this is going to break out, right? It's flirting with these multiple levels here, right? This confluence, and it's going to break out. And I think Cisco's going into the 70s, or the 3.618 line is up around 100. I think Cisco could make a run at 100 in the next 3, 4, 5 years while you collect that dividend from a company that's buying back shares, has a mountain of cash, and is really the backbone, one of the backbones of 5G. So if you're a dividend investor, right, and you're not looking for the home runs, you just want something that's going to grind it out for you long term, buy the dips. Buy the dips on this one. So, my symbol isn't there. I am becoming a believer in mRNA technology. I've been doing a ton of reading on this stuff for 15 months now. And I got to tell you, we're seeing the results come in, right? 99% effective from preventing any reaction from an infection. Largely does prevent the infections in the first place. Prevents transmission in most cases. I mean, you've got big fat numbers, 80s and 90s and 99%. So The mRNA seems to be effective against COVID, which seems to be the disease we're going to be fighting for quite a while. And it has all sorts of other applications. So you can look at Moderna, you can look at Pfizer. I like Pfizer because it pays a big fat dividend. So if you're a dividend investor, I think you should be looking at Pfizer. That's a good chart too. I think this one's going to break out, right? It's been flirting with it. I think it's going to break out. Let's make a run at 60. At some point, we have to look at Moderna. I probably could have put them on the things that we have to think about area. And then AT&T. Tell me that loading up in here wasn't a great idea. Look at it. This is awesome. 1, 2, 3, 4. Boom, boom. Start all over again. I think it's going to make a run at 40 imminently, like in the next several months, by the end of the year or early next year for sure. Then, remember we've looked at the weekly charts. I think it's going to break through here at the top of its range and make a run at 60, maybe 80, maybe 100. Somebody asked about, will this administration give away the mRNA technology? And that's not what they've been talking about doing. They've been talking about temporary waivers of the patents to get more production. And so what that did is it pushed Pfizer and Moderna to start making some deals. That's all I have to do. It's negotiation, right? It's the art of the deal. So Moderna and Pfizer are going to cut deals in the 7 countries that I outlined last week that have production facilities. There might have been 8 countries. Japan, Sweden, South Africa, right? That's all that's going on. All right, but anyway, at AT&T, they just keep putting out numbers. Massive cash flow. Still has Warner, which is hugely valuable if somebody ever buys it or they split it off. And that DirecTV deal is going to come back to help them, because that little thing that the private equity firm did with them, they're going to fold Dish into it. I'm telling you. They might even fold some other companies' legacy client bases into it and come up with one streaming basket that all sorts of different companies can use. Might even call it Sling. I think it is called Sling. All right, pivots. Azure Global, I talked about this last week. Developer of solar projects, and they also run them, do the maintenance, do the distribution of the power. Solar is going to grow fast all over the world. It's going to grow really fast in India. So hypothetically, if it gets down to 17 or 18, that means your price target is way up here in the 80s. Just wrap your head around this with solar. A lot of these companies have between 500 and 1,000% revenue growth potential through the end of this decade and early into the next decade. The companies that provide more services and distribution are going to make a mint, because they go from being asset heavy, being asset light. We've seen this process at end phase. So these companies where they still have a lot of inputs on the build out, once it's built out, then they're just collecting money. So we want to buy at depressed prices when we can get them, because we know what's around the corner. Over the next decade or so, solar is going to crush fossil fuels. It's actually the title of one of my next articles. It's actually 2 articles, 2 pieces. You need to get exposure to clean energy. Shamith thinks that it's the biggest transition going. I agree, because I think Bitcoin is going to get crushed in a not too distant future. Saw Elon Musk called Doggy Coin a hustle. I know they call it Dogecoin, but it's really Doggy Coin. So get on the right side of the big secular trends. The cryptocurrency secular trend is the digital dollar. That's what's coming. And it's going to make the dollar get stronger. So Azure doesn't have options, which is too bad. So you're just going to pick a price. I have orders in at 20, which could get hit tomorrow. I might lower it $1 or $2. Might make it like 18, but I probably will. I'll probably lower this price to 18. And then on track. I mean, seriously, have you seen a better consolidation? I mean, just look at this. Narrower and narrower. Oh, any good news is going to make this baby run. You should have a starter position in on track. You should have some puts sold. I'm selling the $25 puts. And then SunPower, which I think is the strongest solar stock out there. A, because of the backing from Total, which is the majority owner. And they have all the resources on technology and management and distribution. I mean, they just don't have anything bad out there. And their sweetheart deal with Maxion is a good one. So during the build-out phase, they're going to do pretty well. And they've added a lower cost panel. So now they have both types of panels, the super high efficiency but cost more panels. Then they have the cheaper panels that are still as good as anything else on the market. And they provide all the services that come with having solar, right? So think about putting solar on your house. You wouldn't just put it on your house. You need to know how it's taken care of, who's going to take care of it, how the power gets managed. SunPower does all the things you need, from helping with the build to managing the energy to everything else that goes with it. And they're going to make a mint. So this spike, you know, that's classic overbought. Now it's coming back. I think there's just massive support as it gets down in here, as these move up, because I think it's unrealistic to buy it at 6 again like we were doing a couple years ago. So somewhere between here and 14, 15. I mean, it's pretty close right now. It's 21 today, 21s. So I've been selling the puts. I have my starter position already. And I think that this one probably runs to 100 in the next 3-4 years, maybe. I do. I just don't see this terrifying, horrible scenario with the amount of fiscal stimulus that's coming. I mean, there's going to be a transition from monetary stimulus to fiscal, and that's going to keep these rolling corrections playing out. But if anybody believes that we have higher interest rates, legitimately higher interest rates, next 3.5 years, and that we completely get ourselves off of QE, yeah, I just don't see it. So while I see corrections and rolling, and I see a bifurcation of the market, the losers to the winners, as the growth companies that are $2 and $3 and $4 and $5 billion companies and $10 billion companies continue to go up in value and become more profitable, we have to remember what the criteria is to get on the S&P 500. You have to be profitable. You got to be over $10 billion, give or take, market cap. A lot of these companies are going to get added to the S&P 500 over the next several years, and especially by middle of the decade, when the zombies have to dilute the heck out of their stocks or even go bankrupt because they can't pay their debts. A ton of oil companies are going to declare bankruptcy right around 2025, 26, 27, right in there. Another huge wave. There is some merger today of weaklings in the oil patch. So everybody's talking about, oh, oil's back. It's not back. This is a dead cat bounce in oil. You want to be in clean energy because that is the way the world is going. And oil is never going to be a good investment again. It's a trade, you know, people made money on the trade the last 6-7 months. That's fine. It's not an investment. And if you think it's an investment, you're wrong. You've been wrong and you'll be wrong. So if you think of it like a trade, it'll be much healthier, because the market will start treating it like a trade when they've sucked in the last sucker, and then they'll trade it in the other direction. And the only catalyst you need for oil to get beat up is for the Middle Eastern countries to say, we're not going to hold back on production anymore. Good luck, rest of the world. So as demand double peaks on oil in the next year or two, and then flattens out going into the EV revolution, and then turns down as EVs outsell gasoline cars in the second half of this decade or right around 2030, oil's going to get destroyed. Because the only oil producers are going to make any money and they're going to control everything are going to be the Saudi Arabia, Iran, Iraqs of the world. It's just how it'll be. Because if for 1 year they have to push the price of oil down to 20 again to wipe out all the competition, that's what they'll do. And if Exxon had any brains at all, so far I haven't seen any, they would listen to the activist investors. Exxon should get rid of all of their deep sea exploration the way Conoco did a few years ago. All of it. Develop what they got. They just stop spending any money on exploration. And they should probably stop spending money on exploration on land too. Let the universities find oil here and there. And Exxon's going to have to do that because they can't even pay their bills. They needed the price of oil to come all the way up towards 65, 70, basically break even. Do you really think the Middle East wants the competition? No. Exploration by companies like Exxon or Chevron, everybody else is going to go away quickly next 2, 3, 4 years. And they're going to have to do it because they have so much debt. So get away from oil and come to SunPower, come to PBW, come to the other solar stocks, the other clean energy stocks. Few of the SPACs that have clean energy on their target list. And not really the EV companies, because honestly, there's just a lot of competition in cars. So you need to be in a unique situation, be invested in cars, which is what I think Ford is. Great technology, dramatically undervalued. And the things that the market are missing, which is a huge real estate portfolio, which is really a big, big deal, and the ability to do other industry. All right, any questions? Well, apparently I hit everything. So if you have questions, put them in the comment section or in the chat room, and I will get to them in the coming days. Have a wonderful night. I am going to take my girlfriend out. Peace.